I'm going to be exposing my 10K a month trading system. So in this video, you're going to get a complete step-by-step guide on how you're going to make your first 10K per month in trading if you're struggling to do so or struggling to find that consistency, whether you're struggling with prop firms or just struggling in general to find a little bit of profitability in the markets. This is something that I would use specifically looking to make that 10K per month. It is probably one of the most reliable systems to use, and you're going to get a complete breakdown from the system and approach that I've used to make my first 10K per month and the exact trading strategy and one trading strategy that I use every single day live on stream that you can copy and literally just start rinsing these prop firms. So before we get into the breakdown, I want to show you guys that this actually works. I take this setup live on stream every single day. It presents itself pretty much every single day, and it's so obvious and easy to spot that when it comes on the screen, you won't be able to miss it. All right, so this is the trade we caught today. Again, I caught this live on stream in front of a ton of people that caught this trade as well. You can see that we're just absolutely rinsing the markets using this system, and we'll continue to do so. So it's very important that you stick to the end of the video so you don't miss any key detail, because if you do miss a detail, you may not be able to apply the whole system correctly to making that first 10K per month or passing that first funded or whatever the case may be. All right, so let's just dive straight into it. Step number one, we're going to be looking at the strategy outline. So what is the strategy? Well, we're going to be using fair value gaps on the 1 minute time frame and the 30-second. If you have not been trading for a long period of time, I do not recommend the 30-second time frame. It's a little bit more advanced, and I recommend just trading the 1 minute. If you're not comfortable on the 1 minute, you reckon that's too fast, I wouldn't go down to the 30-second. But the 30-second does present more opportunities for trades, at least a trade every single day. We're going to be taking rebalances of fair value gaps, okay? Not when they get inversed or anything else. We're going to be trading when they get rebalanced, all right? But my simple trick, the trick that pretty much makes the strategy, is my specific confirmation, something that I must look for and see every single time before I even take a trade. Next, which we'll get into later, by the way. Next is the outline. All right, we're going to be trading this on either NQ or ES futures. Now, for this exact breakdown, I'm going to be trading it on NQ because obviously that is the pair I trade, and I trade live on stream every single day, but this does work for ES. All right, we're going to be trading between the times 9:30 a.m. and 11:30 Eastern Standard Time. You're going to pretty much find a trade, way before then. Probably that's a 2-hour period. You're going to find a trade, right? If you don't find a trade, then it's not meant to be. You just move on to the next trading day. All right, if you have news at 9:45, you're going to be not trading until 10 a.m. If you have news at 10 a.m., like red folder or orange folder, all right, no trades until 10:15 a.m. And if you have news at 9:45 and 10 a.m., no trades until 10:15. Step number two, we're going to be breaking down the prop firm approach. This is the most overlooked step, and it's probably the most important. So per trade outline, we're going to be looking for either 20 to 40 point stop losses. I go up in 10-point increments, which means you can do 20, 30, or 40. No bigger than that. All right. Again, with take profits, 20, 30, 40. All right. The reason we're doing this is because we're prioritizing base hits. We want no more than a 1 to 2 or a 1 to 1. Reason why is because these two right here have the highest success rate, highest win rate, and highest probability to hit every single day, while these other ones don't have that consistency. And when we're trading with prop firms, you need to be able to be consistent. And that's what they look for. They look for consistently profitable traders. You don't want to be making thousands and thousands of dollars because these prop firms have consistency rules that keep you within a parameter that you need to be within. But if you focus on 1-to-1s, 1-to-2s, and slowly grow over time, you're going to be rinsing these firms, and especially since most of them have minimum trading days or minimum required winning days in order to request payouts. So we're going to be focusing on 1-to-1 and 1-to-2. Now, realistically, you need a 50% win rate to obviously have a profitable 1-to-2 strategy, and a 60% plus win rate to be profitable with a 1-to-1. So that means if we're targeting with a 20-point stop loss, we're going to be either focusing on a 20-point take profit for a 1-to-1 or a 40-point take profit. Again, this is systematically for NQ as well. This is going to give you the cleanest price action, cleanest movement to these take profits before they start to reverse, hesitate, do whatever. Right, 40-point stop losses are pretty much for days that have a lot of volume, like the tariff news that have been going on recently, or if the fair value gap is a bigger size, then obviously having a larger stop loss, 30 or 40, is going to be necessary. But in that case, if we're going for a 30-point stop loss, we have to go for a 30-point take profit, right? And if we're going for a 40-point stop loss, we have to go for a 40-point take profit. Again, If the volatility is like that, same thing where, you need 30 and 30, you can go for 60 or 30, 1-to-1 or double. Same with 40, you can go for a 40 or 80, 1-to-1 or a double. But most of the time when, volume is pretty relative to, what it's starting to slow down to pre-tariff news, 20 points is pretty much all you need, max 40 points per trade. So step number 3, we're going to be looking at the prop firm risk plan. All right. So whether you're on an evaluation or funded, these are the approaches I would take. If I was on the evaluation stage, me personally, I'm trying to take the aggressive trade, which is 400 to 800 per trade. That's probably a bit too aggressive for beginners, or especially if you're just learning with this model. So I recommend starting out with a conservative, which is $200 to $400 per trade. That's going to build your intuition and pretty much you'll have that correct mindset of building consistency early on in the evaluation stage while you're just testing it out. And then obviously once you get deeper into using the strategy and it starts to work more in your favor, which it will, you can go to the aggressive approach to get to that funded stage quicker. Now, if you're in the funded stage, I'd recommend the conservative approach. No matter what, when I say to people when they're in the funded stage, right, you want to speed up evaluation, you want to slow down funded. You really don't want to rush the process because most of these firms, again, require minimum trading days. So why rush it? Okay, why have more chance to blow a funded account? So I'd recommend 200 to 300 per trade. But again, the aggressive approach is there for either $400 to $500. It's going to be 1% right here. The reason I say 400 or 500 for more an aggressive approach is for firms that have, buffer requirements. So certain firms like futures firms like Apex have a buffer requirement and take profit trader. And then the firms that don't have an aggressive approach where really all you need is a conservative approach is like my funded futures starter plans on 50Ks. All right. This is all going to be relative to a 50K funded account. Okay. Obviously you can do the math like percentage wise of account balance to any other account size. But again, the firms that I use are My Funded Futures, Apex, and Take Profit Trader. For step number 4, we're going to be breaking down fair value gaps. If you already know what a fair value gap is, you can skip this part to step number 5. But if you don't know what a fair value gap is, stick around for a bit while I just explain it. So a fair value gap is made up in a 3-candle formation. It takes 3 candles every single time. Not 2, not 4, but 3. You're going to measure a fair value gap by measuring the first candle's high and the third candle's low for a bullish fair value gap. A bullish fair value gap is when price is appreciating and then leaves an imbalance, or a fair value gap as people know it. A fair value gap is measured between the distance of these two lines. So if the third candle's low and the first candle's high does not meet or overlap like they do over here, you can see they meet and overlap right here, then that is going to be your fair value gap. So it's going to be just pure candlestick body. What this means is during this time period, let's say this candle right here is a 1-minute candlestick. During this 1-minute time period that this candle was forming, there were more buyers and then sellers. Okay, more buy orders than sell orders, and this increases the price, increases the appreciation of the stock. Let's just say Nasdaq. All right, so it creates an imbalance. There's not a balance between sellers and buyers. So what price needs to do is it needs to come back down into this imbalance, fill this imbalance or this fair value gap, and then trade away, right? This allows sellers to come back in the market as it sells back down and rebalances that area. Same with here, if you don't have a fair value gap on this example, then price does not need to come back down here and rebalance. So this is a bearish fair value gap. A way to mark out a bearish fair value gap is by marking out the first candle's low and the third candle's high. And in this range right here is going to be your fair value gap or inefficiency or imbalance. All right. Again, it's only sell orders in here, more selling pressure than buying pressure. So price needs to buy back up, rebalance this entire area, and then there you go, come back down. Now, an example of a non-bearish fair value gap, again, when the first candle's low and third candle's high meet or overlap. You can see there's no gap there and price doesn't need to come back to continue to fall. And lastly, for step number 5, the confirmation. This is the special key that I like to use in order to have a very high accuracy in these trades, right? Something that gives pretty much the biggest increase in your win rate or your success rate when you're taking these positions, right? And all we're going to be looking for is candle closures above previous candle highs and candle closures above previous candle lows. All we want to see is when price has filled that imbalance, which let's just say is in this area right here, right? That the next candle or any candle after which, all right, closes above the previous candle high. In this example right here, let's just say the fair value gap was here. We've rebalanced it. We want the next candle to body close below that previous candle low after filling that imbalance. An example of a non-trade, right, where obviously we would take our trade on the closure right here. right? An example of a non-trade is when price does not body close but pushes through previous candle high after coming into an imbalance. If price came into a bearish fair value gap right here and then fails to close below previous candle low, then this is going to be a no trade. We're going to wait until the candle then comes down and breaks this one. Whether this one we don't need to, we can enter right here. All right, same goes for here. We can enter right here, but we'd have to measure that new high and wait for a candle closure above that before we can take a buy position. Let's do a quick breakdown of the 1 minute and a 30-second example. Obviously, it's going to be relative to watching it in real time. This is just a couple screenshots of trades that I caught from Monday's session. But instead of taking a trade inside of the fair value gap, because a lot of the fair value gaps either don't work or you get stopped out prematurely and then they work in your favor. So how do you more so narrow down what is the right fair value gap? Well, the easiest way to do that is by using candle breaks, all right? Breaks of previous candle lows after retracing into that fair value gap. So you can see right here, we had a bearish fair value gap, which we retraced into. We had a previous candle low. We're always focusing on the previous and the current candle. Right here, you can see that we body closed below previous candle low, and then we were able to drop down for a 1 to 2. When I take this setup, you have two options for the stop losses again, 20 or 40 points. 20 in this example right here is what I took, which would be a break of a previous candle high. So that would disrespect and invalidate my position anyway. Since we're scalping, we're looking for short-term movements. That's kind of our process. Right. Again, if you ran a 40-point stop loss, your stop loss would be up here, much safer, but this would only be a 1-to-1 risk to reward, whilst this one was a 1 to 2. So it's completely up to you. If you have a 1-to-1, which is a much safer stop loss, you can risk more aggressively. But if you run a tighter stop loss, you can risk more conservatively, but obviously have that 1 to 2 in chance to double it. Now, there is one rule that I must always look out for when using this model. If you have an internal swing point like this, where we swung lower and this is a swing low, we come into the gap and the candle closure closes after taking and running past this swing low, then that is a no trade. Right here, you can see that we did not sweep past this swing low and closed first. That makes this a valid entry. All right, we should anticipate that price is looking to continue past that low, or at least at that low. So for the 30-second example, you can see we had a bearish fair value gap. Again, we came into that fair value gap respecting it, but rather than me taking an entry on that fair value gap, I wait for a break of a previous candle low. I want to see that candle closure before coming past that swing low that we have in this example. If you don't have that swing low, that's fine. But again, you pretty much will, if you're having a fair value gap, you're going to have a move down and then you're going to have a retracement up. So you pretty much will see that swing low at some point, or a swing high. So we do not want that candle that's going to close, that we're looking to see close, come past this swing low first. That makes it an invalid trade. So right here, we can take our entry, anticipating price will get to here and move past. And you can see both of these stop losses are 20 points. But look at how aggressive this one is to get a 1 to 2. Right? And look how much safer this one is to get a 1 to 2. So why I prefer the 30-second time frame that just present more opportunities in the market during my set period of time that I'm sitting down in front of the charts on the live streams, right? And obviously I can execute much more safer positions. So for example, number one, I'm going to be breaking down today's live trade that I caught live on stream in front of all my students. So right here, you can see that we pretty much came up, took this buy side liquidity. Then we had a change in the state of delivery right here by inverting this fair value gap. That was letting me know that price is ready to go lower. Now, right down here, we had this swing low, which is also a 15-minute unmitigated bullish fair value gap. So that was my main draw on liquidity. That's where I wanted price to go to. And you can see that I only really go for 40 points per trade just to stay in risk parameters of like consistency rules and stuff. But you can see how far this trade actually went. It went 163 points, and you can absolutely catch this every single day if you need it, right? Because this is one of the most powerful models to actually trade. Whether you're trying to pass your funded account one trade or have an insane daily withdrawal on Take Profit Trader, you're going to be able to do it. So we had that change in state delivery. All I'm looking for is a fair value gap. You can see we had this top one. If price was to come in there, look for the same thing I showed you guys before, that same confirmation. We ended up coming into here and having a candle closure below a previous candle low. So if I mark this low out, which is the most recent based on my entry candle right here, you can see that we body closed below it. So I took my entry as that candle closed, which entered me on the next one. I had my stop loss at 20 points, which was a bit tight. So realistically, real time, I moved it to 30 points just to put it outside the gap just a little bit, but I was risking the amount of 20, right? Once it moved more in my favor, I pretty much just cut that trade in half and just didn't risk anything. I was risk free on that trade as soon as we start to move past these lows more into profit anyway. But I just gave it that real-time breathing room, and I'm going to be honest, I did extend it and I was risking for 20, but I knew it was going to go in my favor. I just wanted to go in my favor pretty much immediately, but I did get a small retracement. But this just goes to show how powerful this system works. And any other fair value gap that you will look for on this single day, if you don't see a candle closure below previous candle low after respecting that gap, you will likely find that it doesn't work. For the last example, I'm going to be showing you the trade that I called out and took live on stream in front of everyone. And again, they all caught this trade. Right, so pretty much coming into the session, the context between that trade and why I wanted the shorts and why I entered a short, we took out these relatively equal highs. Again, on the 30-second time frame, we can see that we broke structure twice and inverted this bullish fair value gap, changing the state of delivery. We can see that we're respecting bearish fair value gaps and disrespecting bullish fair value gaps. So all I wanted to see was my setup. Now, I did not take this setup because when we did body close, finally, we took a low, which I wasn't really happy with. So I waited for my setup. And again, the context was I wanted price to return all the way down to this opening range low. And that's exactly what I was looking for. Now, again, I was only just focusing on 40 points, but you could have caught all the way down to here for 105 if you wanted to hold it, if you needed to hold it that far. Now, for consistency rules, I don't need to do that. You know, I can pretty much just hit 40 points and walk away and be done for the day. When I entered, when that candle closed below that previous candle low after respecting and delivering from that gap, that's how I knew that fair value gap was perfect. That was what I needed to do. 20 points perfectly sits above that high, which is a good safety point for my stop loss. And again, price ran straight down to my 40-point take profit, hitting me for a 1 to 2. And I can get out and I can just let the trade marinate. And you can see how long this decided to sell off for, which is very, very easy for a 1 to 17, as you want to call it that. Obviously, that's a little unrealistic every day. We want to focus on realistic results. If you want to learn more about the strategy and you want to trade live with me every single day where I call out these trades, show you the executions live on stream, so you can literally just follow along and learn at the same time. I teach you everything that obviously I don't share on YouTube inside of my community, and you can pretty much just learn how to be a prop firm rinser yourself and go out on your own and start rinsing prop firms pretty much within 30 days to 60 days. And you'll start making 10K, 20K per month before you even know it. Then all you need to do is click the first link in the top of the description. It'll take you to where you need to go, and you can finally understand how to make money with prop firms. And as always, if you got any value from this video, like and subscribe for more education.